Good morning, good afternoon, Hong Kong. Guys, today we're here with Jack and Moshe. We're going to talk about all the liquidity and capital that Bitcoin is draining from traditional markets and traditional finance and just from the world. Could we please start, Jack and Moshe, could you guys please give a brief intro of what you do, what your companies do, so everybody gets a quick glimpse, please?
Thank you. Thank you, everyone. I'm Jack from LTP. We are #1 digital asset prime broker in Asia, regulated in Hong Kong, BVI, Spain, Australia, and also a lot of districts. And we provide service for all the trading companies, the prop trading, hedge fund, also provide asset management service for the list company, family office, venture capitals. Yeah, our goal is want to be a multi-asset prime broker for all the trading assets. And we are setting up a unified clearing for all the trading solutions.
Moshe Shen here. Nice to meet everyone. Good to be back in Hong Kong. We're Wintermute, so we are a HFT trading firm, prop shop, OTC desk. We're fairly large in the market itself, trading anywhere between 15 to 20 billion a day. We're fairly large in DeFi, we're fairly large OTC desk, where we quote risk price blocks as well as API. Yeah, we're fairly large in derivatives as well. So everything from spot to exotics to structures, etc. Myself, I joined 3 years ago. I moved from Hong Kong actually to Singapore to join Wintermute. So at Hong Kong, I was previously at Goldman's. So therefore, 10 years across London and Hong Kong.
So Jack, Moshe, for the last 12, 15 months, Bitcoin has been ripping basically. We've gone up all the way to $125,000 per Bitcoin. Now we're at 113. Please tell us how the demand for Bitcoin has been growing here in Asia, because I mean that you've been getting tons of requests and that the business has been growing a lot. How are you seeing the inflow of money in the world outside from crypto into Bitcoin now with all of this price surge and in this bull market?
I have to start first. I mean, one part of our business, well, two parts of business, how we interact with Bitcoin is A, we trade on the exchanges directly, so we see the flow of funds trading against us on the venues, and secondly, essentially on the OTC desk. So definitely throughout the bulls from 70 to 125, we've seen a lot of bids to essentially accumulate, right? So that come from a range of whales, from instis, from retail brokers who have lots of retailers trading on their platforms, and it is being a much more accepted asset class, especially after November, especially after January. That's really picked up. And of course, most recently, the DATCO, so digital asset treasury companies, they're just accumulating not just Bitcoin, but tons of other assets as well. So that's been just one-way traffic mostly.
I think in the past 5 to 6 years, all the players in crypto have changed a lot. I joined crypto from 2018. At that time, all the flows come from maybe 80% from retailers, and the institutions are like crypto startups, exchanges, and some venture capital, some projects, some VC. Nowadays, they have been changed to the list company, the pension fund, state fund, or the big whales in TradFi. I think the ecosystem changed a lot. In the past, when you trade we get a lot of flows. It's maybe the biggest flow is several million per order. Nowadays, we get the flows is maybe 1 billion to buy Bitcoin or sell Bitcoin. This kind of flow reflect that the players have changed a lot, and all the players, when they come, they want to find different service providers. Previously, they just want to have a UI interface or API, just execute some orders, buy some tokens, and they aim to get 10x of the returns. nowadays the big players, they just want to find a stable yield. They hold like several billion or large amount of Bitcoin, Ethereum. They want a stable yield. They want to put their fund in like a bank or a tri-party custodian. They can access to different like trading pairs, like you can trade spot pairs or options, and they need to liquidity from the exchange or from OTC. So I think the ecosystem changed a lot.
I'll probably add to that bit. You know, if you look back previous years, as Jack rightly said, it's mostly retail. And if you're an institution, you would have to open the exchange account and trade and custody there. Over the past few years, the service provider landscape has really, really improved. Now you have a custodian that's separate to a trading, that's separate to risk management, separate to exchanges, and and actually should be the right way of doing this. You know, crypto did grow because exchange will essentially collapse everything into one. But for it to really grow for institutions, then you need to separate the different business lines. And one of the things that we really see on our side is the percentage of flow going through what we call OTC business versus our on-exchange business. And that's really, you know, past 3 years, that's really done a 5x of terms of proportional flow as a proportion of our business. So OTC is really, like, OTC means that, you know, larger counterparty institutes want to trade in the bigger blocks, right? They come to us and say, I want to buy millions, tens of millions, hundreds of millions of blocks. And we are one of the typical thing with essentially a macro manager, they trade commodity, they trade rates. When they come to us, they have a view. They have, you know, PPI that's coming up, CPI is coming up. They want to express a view in the market. Bitcoin has become an instrument they use on top of rates, in top of 10 years. To express that view, and it has become liquid enough, and once you deploy in size, for them to really consider the part of a portfolio. So that's been one of the big noticeable changes in the last 18 months from our side.
Yeah, I think maybe 6 years ago, 80% flows come from the retailers. Nowadays, I think 80% from the institutions. For them, like all the high frequency trader in this world, they all come. Maybe they trade crypto for a long time, or they trade the Bitcoin ETF in Nasdaq, in CME, and or they hold some position in this market. They provide liquidity or provide some service for the institutions in the US. In this ecosystem, I think maybe the infrastructure change a lot, also make the liquidity in this market change a lot. You can see that you can combine all the liquidity in the crypto exchange or the ETF, the exchanges in Nasdaq, in CME. The pool, the order book have been like, it's much deeper than before. Like 5 years ago, when you want to sell like maybe 10 million of Bitcoin, the slip rate will be around like 1% or 0.5%. Today, it will be like 0.1 or less.
So we've seen this in the recent Bitcoin sale by Galaxy Digital, 80,000 Bitcoin. The market absorbed it beautifully. Guys, this cycle is a cycle where we've had royal families, sovereign wealth funds, countries, corporates create Bitcoin strategic reserves or buying Bitcoin ETFs, whatever. From your position, like in your companies, how much, like, what's the Bitcoin dominance against other crypto assets of the interest of all of these players? Again, sovereigns, corporates, blah, blah, blah. What's Bitcoin's dominance there in that inflow of capital into the industry?
It is mostly Bitcoin. Bitcoin, Ether, and the majors. I mean, we as a firm, we trade a long tail of asset. It is a meaningful percentage of our volumes, but when it comes to institutions actually wanting to buy and accumulate in size, it is Bitcoin.
I think Bitcoin is the first step for the newcomers know what crypto market it is, and also know what blockchain technology it is. Maybe they will buy Bitcoin with ETF, and they will think like, what is Bitcoin? Why the price improve a lot? What's the inside value of Bitcoin? And they will know, yeah, there's the other cryptocurrency other than Bitcoin. They have Ethereum, or have some DeFi protocol coins, and you can see like it's different wave. Like 6 months ago, the Bitcoin domain ratio is like 70%, because all the newcomers, when they come to this market, the first thing they learn is like Bitcoin. Maybe they don't know blockchain technology, but they know Bitcoin. When they know Bitcoin, they will see like there's other coins, like Ethereum. It's another thing they will want to build. And on like DeFi, also some kind of new concept, and they can try DeFi. They can try trading, lending on DeFi, and on another coin like Uniswap, RV. So someone think Bitcoin ETF will make this industry more centralized. But I think that's the first step to make everyone knows. Then they will know that if they want to hold their own Bitcoin, they need to have hard wallet to hold the private key by their own. It's their own money. It cannot be controlled by any government, any business, any company. So it's different steps.
Guys, talking about this liquidity black hole, something I always love to say is there is no Bitcoin. Like 21 million Bitcoin is very, very, it's a tiny supply. I like to say there is no Bitcoin available. How do you see like this kind of supply shock with all the demand that you're seeing? How do you see like this liquidity black hole trapping all of this capital in an asset that has such a small supply? How do you see this playing out?
Yeah, I think there's a bit of a running joke on Twitter is like when the OTC desk run out of coin, that's when it's right. I mean, OTC does not run out of coins, right? I mean, as a firm, they should be market neutral. It just means that it's priced higher because that's what the market supply and demand is. Bitcoin, just like anything else, is a supply and demand. There's limited supply, but it seems a lot of demand right now. So that's what basic economics is, to just drive the price up. And there will always be a seller at higher prices, and there will always be a buyer at certain prices.
I think, yeah, Bitcoin, the numbers is limited. Previously, when Satoshi created Bitcoin, they want to be like a cash to use to settlement. But nowadays, it's truly different. Maybe Bitcoin will be the collateral coin in crypto world. Also the asset to hedge the fiat inflation. Also, you can use Bitcoin as a base asset and clearing with the other chains. So it will be the base asset in crypto world. And also it will facilitate the other business when dealing with like all the collateral side use case. Maybe mining, it will be like mining bonus will be less and less, but the use case of Bitcoin will be more and more.
Can we please talk a little bit about Bitcoin Treasury companies? And you guys at LTP and Wintermute, these companies are buying plenty of Bitcoin. This naturally is creating additional demand. how is this impacting in the Asian market? Are you seeing investors, partners, clients, and so on interested in investing in these companies, or at least working in these companies? I know that you guys, we were talking before, you also offer services to these companies, Bitcoin-based products, and so on. What's the general view, again, connecting this to Bitcoin trapping liquidity from traditional markets? How are you guys tapping into this new phenomenon, let's say?
Yeah, we think this idea is super great. Our crypto market need the more liquidity from the equity market to make everyone can access to crypto exposure. Maybe like 200, like maybe I think 200 million of the people in the world have held crypto before, but for the equity market, for the capital market, the big potential is like 2 billion or 3 billion. So each will make our market have like 10 times of the potential to grow. And also, we helped some DTAT companies. We invested some. We invested Nakamoto Bitcoin Treasury company. We invest some BNB Treasury company. We also do provide asset management service for DAT companies, generate yield based on their Bitcoin treasury. I think, yeah, Bitcoin, the number is limited. We need to try our best to grow our Bitcoin numbers. You maybe buy or you maybe do the asset management. And also we provide some OTC service for the DAT company when they want to buy a large size of Bitcoin.
I'd say the DACCOs has been a phenomenon that's really picked up in the last 6 months. I mean, strategy and Metaplanet has written a very clear playbook of how to initiate and continue this. So we've definitely seen, we've been involved in some of them, discussed with a lot of them, and what we've also seen is that the way to accumulate is really changed. You just not just buy from spot and you TWAP in the market. Now there's no more financialization that's been built. Just like whether you're in traditional finance, right? You are using derivatives. I mean, Metaplanet has been famed to do this by selling puts to accumulate more Bitcoin. And once you accumulate Bitcoin, then how do you continue to generate a yield? Because at the end of the day, like Bitcoin is these DACCOs buy Bitcoin because it is it's to them viewed a better treasury over long term. Now, once you accumulate this treasury, how do you continue to generate return, ROI to your shareholders, to investors, to continue to build? Of course, Bitcoin price could go up more, but then how do you actually generate a return on your existing holdings? Now, in active discussions with a lot of them using a range of places. I mean, Bitcoin as an asset doesn't really have a native yield, right? There's not too much of a on-chain DeFi yield. Where does yield come from? Really come from two places. One is it's used as a trading instrument, which generates yield, and secondly, from the volatility, right, of this. That's what you can selling calls, selling puts. There's a price that people to pay for the vol, to buy the vol. So those are some of the more obvious yield plays that you have. Once you accumulated a large amount of Bitcoin, then you could think to explore. And also these DACCOs, I would say it's still the early innings of their development. Again, I don't know how many DACCOs will continue to come out, but they're still quite early because they're at the raising money accumulation stage. Now, next stage will be think of treasury management, like I mentioned, and the final stage of what is the end game for these DACCOs, or these as a treasury. I've got all these Bitcoins or any asset class. What do I plan to do with it? Do I just keep holding it forever? Do I have price targets to potentially sell? Do I have I raised debt? And what happens if Bitcoin falls, right? I encourage a lot of the DACCOs to go through this experiment and think, how do they raise money to buy the Bitcoins? Are they at risk of having such liquidation prices? And then what do you do? So just maybe anticipate this before you need to think about it. Because if you do think about it, then it's usually too late. So just have the thought experiment between the companies, between your peers, and what's the course of plan. Of course, the Bitcoin could just keep going up. That'll be all fine. But it is a market. It has the market price dictates whether you're right or wrong. So I say just anticipate.
One last question. I would say I'm going to put two. Are we going to get much more Bitcoin treasury companies in Asia? And any final remarks, final words that you guys want to give?
Sorry?
If we're going to get more Bitcoin treasury companies in the Asian markets. And any final words, remarks you may want to give?
Okay. I think nowadays the Asian market was blocked by some rules from the capital market. Yeah, I think in US it's easy to get a pipe deal to list company, and you can change your the company's goal and change a company to a DAT company. But in Hong Kong, in Korea, it's hard. It's blocked by the compliance issue, the rules by the set up by the SFC side. Or the industry, I think we are trying to persuade or help how we can get there, but it needs some time. I think the need is there, but nowadays both blocked.
So will there be any DAT codes in Asia? I think if you're going back to the genesis of just crypto adoption in Asia, it's very, very strong. There's a lot of accumulation, including the Metaplanet, including other DAT codes. They might not be Asia listed, but they have the genesis or genes of Asia. Some of the biggest miners are from Asia. Some of the biggest holders and some of the biggest exchange owners are from Asia. So in terms of, as Jack says, some of the capital market restriction means they might not able to list a listed company in Asia because of restrictions. But that's where they go to US. That's where they go to other countries to actually do the public listings. But if you actually go back to the Bitcoin treasury company list, you can see that actually a lot of them are Asian background, and because it's very dear to their heart, dear to their genes.
Thank you. Please, a big round of applause to Jack and Moshe.
Thank you.
Thanks, everyone.
All right.